Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Chaz Price. 419-794-3030 is the phone number. Once again, that's 419-794-3030, online, arhq.com. If you missed the first half of the show, you want to catch up on that or previous editions of the show, available via podcast, Apple Podcasts, Spotify, wherever you consume your media. Just search for America's Retirement Headquarters. Or as Nolan mentioned at the beginning of the show, if you're one of the people who's helped America's Retirement Headquarters on YouTube reach 50,000 plus views at this point, thank you for that. And there's no time like the present to go ahead and subscribe to keep up to date there. All the topics that we've discussed there individually there for you, available on YouTube. Same thing, just search for America's Retirement Headquarters. Now, we've heard a lot of differences of opinion lately when it comes to the Fed's handling of interest rates. Here is another one. Investment strategist Donald Luskin recently told Fox Business that rate hikes are making, he says they're making the economy stronger.
It appears from all the evidence, like the more the Fed tightens, the faster the economy grows. I know that's insane, but that is what the evidence shows. I know it defies intuition, but I think we need to educate our intuition in the light of the data. I think one of the things that we may discover here is that we went through about 15 years after the great financial crisis of zero interest rates and low inflation and jobless recoveries and all that stuff. It could be that we've broken out of that and we're back into an era of productivity-led growth, the likes of which we've just forgotten about because we were in secular stagnation for 15 years.
Let's talk about what Donald said there. Have higher rates actually given people that are ready for retirement a new opportunity?
I think, to me, it depends on what side of the spectrum are you on. So if I think about a lot of our younger listeners, or even my son, he's getting ready to finish up with college, and he just recently got his first vehicle, and then he's at some point probably going to buy a home in the next 5 to 10 years. Higher interest rates have a real big negative impact on those people who have debt. So hopefully maybe causes him to slow down a little bit, make a little bit more of a smarter decision of whether, I need that home or that big a home, or I need that car right now. On the flip end of the scale, if we think about our higher interest rates giving people a new retirement opportunity, I'd say absolutely. Again, if we talk about our listenership and we think about things over the last couple of years, Chaz, I know we've tried to give our listeners a lot of great advice about, the risk that we saw in the interest rate environment. And we talked about, repositioning their portfolio maybe away from some bond funds into other fixed income investments. And, with the limited choices, if you go back a couple of years ago, what it oftentimes did is it led to, investors getting more involved into equities. And, we've now in 2023 had a pretty strong rally in equities. And what we've also had is we've had a pretty strong rally in interest rates. So in my opinion, with the higher interest rates, I think it does give retirees another opportunity, and that's an opportunity to maybe rebalance their portfolio here at the year end or at the beginning of the year, to get their portfolio to be able to take advantage of what some of these fixed rates are, because they're the highest that I've seen in my kids' lifetime. It's a great opportunity for somebody who wants to add some stability into a portfolio. So whether it's you're reducing your equity exposure or you're reducing your investments that are interest rate sensitive like bonds and adding in more fixed income investments, that could be a traditional FDIC insured CD. It could be a high interest money market fund. It could be a fixed annuity for a set period of time. I think those can be areas where these higher interests can give people a little bit more stability. It adds a ton into their portfolio. It's also an area that I would say, based upon what has recently come out with the core inflation numbers, also what I'm beginning to see coming out from email communication from the, say, insurance companies of the world, or money market funds, or fixed rates, there's an expectation that rates are going down. We're already starting to see some of the products in the fixed rate environment come down. So again, time is, I think, important if you like where interest rates are. If you want to look at rebalancing your portfolio, that's how you can do it. If you say, hey, Nolan, I don't know how much of my portfolio I should have in these higher fixed rate investments, that's an area where, again, having a conversation with a professional like us can help you determine, what could be the right asset allocation mix for going in from 2024.
Yeah, I would agree. I think, it definitely does offer some opportunity for retirees to get a pay raise. I mean, if you're looking at a year and a half ago getting 1%, now you can get 5% on a liquid savings account. I mean, that's a pretty big jump in income. And so that's also positive, I would think, too, Nolan, for the economy, that retirees maybe that were previously hesitant to spend any money. Now maybe they feel more comfortable about spending the economy. In fact, we've seen in the this year alone, one of the biggest contributors to economic growth has been Taylor Swift tickets. I mean, I'm joking, but seriously, I mean, these experiences that retirees have kind of been pent up and not been able to go anywhere, they're starting to spend again. So I would think that's probably maybe a function of they just feel a little bit more comfortable and have some income coming in on safe monies. That's actually probably, a good indicator. Also, the stock market. I know part of the segment here, part of this piece was about, does it strengthen the economy? Is it, are higher interest rates actually good for the economy overall? And if the stock market is a leading indicator of economic strength and ability and growth, I would say, yeah, it's actually been a positive. I mean, it's definitely allowed us to provide more income. It controls inflation, brought some borrowing costs up for, millennials and Gen Zers that are out there looking for houses. It has slowed down the housing economy as well a bit, but I think it generally stabilizes the economy, stabilizes the U.S. dollar, puts a bigger demand on U.S. dollar denominated investments. And so I think overall it's a good thing for retirees. Higher interest rates, not super high. I think we might have actually found this soft landing. I mean, if I had to declare victory, I don't think it's just yet, but I think, the Fed is getting ready to pop some champagne here pretty soon, because we've had very little, we've had some CPI come down. We've seen that from 3.7 to 3.2. We've had very low unemployment. We've seen we've gotten this rip your face off year-end rally in the stock market. I mean, things are going well. And so I think, yeah, higher interest rates right about here is kind of a good place. The government can stop here. I don't think we need to go much higher, but I think it has been a good opportunity. The other point too is income on annuities. We talk about, the income annuities, the lifetime income guarantees that people can get from insurance companies. The way you insure your home, you can insure your income. And those lifetime payouts, those income guarantees, are based on whatever the prevailing interest rates are at the time. So a year and a half ago, an income annuity may not have been a great option for an investor, but if you look at 12 months later where interest rates are 5 times higher than they were, that might actually be a solution for people to start looking at again, which is what previously wasn't really a viable option in my opinion.
The team in America's Retirement Headquarters, they're constantly talking about threats and opportunities, things that, in any situation at the stock market, there are winners and losers. So higher interest rates right now, probably not the best time to go ahead and take out a loan for that first house or, start a new credit card, things like that. But there are ways to make it work in your favor, especially if you are looking to generate income off of some of these strategies. But it's going to vary from person to person as far as what's going to work best for you and how to go about doing it. They'll be happy to have that conversation with you. Just give a call, 419-794-3030. That's the number. Or you can go to the website as well, arhq.com.